Hi, I'm Mr. Beat, one of the subject matter experts here at Chegg. The tax system in the United States affects Americans daily, but it's often too hard to wrap our heads around. Let's break down the confusion behind the tax system together. While few people enjoy paying taxes, most everyone agrees that they are necessary to keep society running smoothly. Taxes go toward public goods like hospitals, roads, and schools. In this way, taxation can promote economic growth. Every hospital or school that is built will then go on to produce more jobs and fuel more spending. But taxes can also be used to discourage negative behavior, such as taxes on cigarettes and alcohol. The U.S. has many different types of taxes that serve many different purposes, like economic and political goals. There are many debates over who should get taxed, how much should be taxed, and what those taxes should go towards. Politicians and economists alike often discuss tax reforms that they think will help society or reforms that will garner support from their base. Regardless of if you agree with the tax system or want to reform it, it's smart to understand how it functions and what it's designed to do. The U.S. uses a progressive tax system, which means that a tax a household pays increases with their income. There are two main reasons the government does this. The first is to address and limit the harms of income inequality, and the second is to put more money back into the economy. First, let's talk about income inequality. Consider a family that makes $50,000 a year and a family that makes $200,000 a year. The family who makes $50,000 may only be taxed 10%. The remainder of their income, $40,000, is likely to go to mostly necessary goods and services such as bills. The family may also save some of their money, but it probably won't be very much. Now, consider the family making $200,000 a year. Perhaps they are taxed 25%. After taxes, they are left with $150,000. A family like this may spend the extra money on necessities, but they are also likely to spend some of that money on unnecessary goods, such as a vacation home or designer items. Even after spending some of this money, they may decide to either save or invest the rest of it. The tax system is thus designed to ensure that the poorest and the richest are still able to afford basic necessities. Even with higher taxes, wealthier individuals are still generally able to afford and save more than those who are less wealthy. While some disagree with the progressive tax system, it's useful to help ensure that the poorest in our society are still able to afford basic necessities. Next, let's talk about putting money back into the economy. As I just mentioned, the wealthier family may spend some of their money, but they are unlikely to spend all of it. Meanwhile, the family with less income is more likely to put that money towards goods and services. While they may save some of it, they won't save as much as the wealthier family. This is called the marginal propensity to consume. Overall, the government wants to encourage individuals to spend money. When people do spend money, say on grocery shopping or at restaurants, this money goes on to support the business and their workers. Thus, spending money supports jobs and helps people to spend money in the future. This helps the economy flourish and is called the money multiplier effect. Even though the U.S. tax system overall is progressive, some aspects are regressive, which means certain taxes are proportionately higher the less income you make. Some argue that these taxes are especially detrimental to new businesses or the poor. Finally, the U.S. also uses some flat rate taxes. These are taxes that are charged equally regardless of a person's income level. An example of this is the liquor tax. These taxes are sometimes called sin taxes because they are designed to prevent people from overspending on goods that are considered harmful to society. The government has many different taxes, but we'll break them down into three main categories: taxes on what you earn, taxes on what you buy, and taxes on what you own. First, let's talk about taxes on what you earn. You're probably familiar with income tax, which is for salaries, wages, and investments. There are also some other taxes that fall into this category, although not everyone has to pay them. These taxes include corporate income taxes, which are taxes on businesses, payroll taxes, which finance social insurance programs, and capital gains taxes, which are taxes on assets like jewelry and stocks, stuff that may increase in value over time. The next category are taxes for things that you buy. For this type of tax, you are probably most familiar with sales taxes, which are taxes applied to most goods and services. Few countries still use a sales tax, but in the United States, a sales tax is hard to avoid. There are several other taxes that fall into this category as well. Gross receipts taxes are applied to a company's gross sales. This can be detrimental to young or struggling businesses and have long been debated. Still, they remain popular with policymakers. Value-added tax is a tax based on the value that is added to an item as it moves along the production channel. The consumer sees the final tax when they purchase the item, but by then it's already embedded into the sticker price. And excise taxes are additional taxes on certain products that are usually used to prevent people from overspending on products like alcohol and cigarettes. Finally, let's talk about taxes on things you own. The one that you might be most familiar with is property tax, which is placed on buildings like your home. There are a few other taxes you might run into, including tangible personal property taxes that are placed on items that can be moved, like machinery or cars. Not every state utilizes these. Estate and inheritance taxes are taxed on someone after they pass away. And wealth taxes, which are applied once someone's net worth becomes exceptionally high. Now that you know why the tax system exists, what system the government uses, and what specific taxes you might encounter, hopefully you can decide what taxes you support and which, if any, you want to change. Whenever you're ready to learn more, come back to Chegg. You can see solutions that we've already worked out, or ask questions from Chegg subject matter experts.